Hi, welcome to Africa Oil Week. I'm Malcolm Graham Wood from Malcy's blog, which I'm writing this week from Cape Town.
So Andrew, great to see you down here in Cape Town at Africa Oil Week, and maybe you want to just give me a quick outline of what Riverfort hopes to do here and what the sort of products you're hoping to maybe get people to take with you so that you can invest into the company.
Yeah, thanks for the invite. It's fantastic weather, great place, fantastic weather to be here. And so what is Riverfort all about? You know, we have access to about $100 million of capital. We're doing about $50 to $70 million of financing per annum. And what we're really looking for is creating win-win situations between companies and us. We really like to look for companies that have great growth potential, assisting them with financing to deliver those outcomes, the strategy, implement the strategy to, release the value of those companies. For us, what we really want to do is take companies from, essentially zero cash flow up to, $1 or $2 million of cash flow per month. And, in our opinion, when companies have that kind of money, producing that kind of cash flow, they're in charge of their own destiny. They probably outgrow us, but that's for us success. When a company says, we're having a lot of interest from much larger players, for us that's a success.
And that's the neat bit. I mean, you're playing in the junior space, basically, where perhaps the bigger institutions aren't quite ready, and you can provide that access to capital. Are there any good examples of African oil companies where you've done a deal in the past? Or
a couple of weeks ago we closed the deal with Savannah Petroleum, so we assisted them. So it's a large market cap, unfortunately, or not unfortunately for them, unfortunately for us. Large market cap from $200 million or excess of $200 million. We provided them $5 million of bridge financing to close the seven energy acquisition. So again, where we are helping with the company there is, a company could go to the market, raise that equity, whereas the company is saying that we trust them and we believe that they will close the transaction pretty soon.
That's a good deal. So Savannah's a good. Was that a relationship you had with Andrew Knott, or how did you come about that transaction? What made it evolve?
So it's a lot about being in the right place, the right time, having contacts. Being involved with people that are in the business, working out where we are applicable or not.
Yeah, and so you obviously actively look for companies to invest in. How do you work with the whole financial community, should we say? Do you like to work with brokers? Do you work with the lawyers? Or do you tend to just pitch yourself?
No, it's all collaborative. It's about speaking to brokers, it's about being with lawyers, it's about, nothing happens in isolation in this world. If you're not involved with different people that know what's going on, chances of you getting anything done is very low. So what we do pride ourselves of is once we have a company or we work with a company, we like to be, we definitely like to be very quiet about it, make sure that the deal gets done without any leakage or anything like that. And
which is pretty important today, because we do, unfortunately, in the retail world, have a lot of leakage. So to have that privacy is very valuable.
But it's definitely about the relationship with people that assist those companies, from the brokers to the lawyers.
I think it's fair, probably, that your model has evolved quite a lot. There used to be in the old days, certain people who were perhaps a little bit wary of your model, whereas you've evolved it now, I think, to a much cleaner, more effective for the company. Would that be fair to say?
I think the big difference from the past to what now, or what we provide now, is that in the past there's the concept of, when a company is not in charge of its own equity, it really loses its own right, its own destiny. So all our products that we provide now is the company is always in charge of its own equity. So be it conversion, be it a senior secured type financing or an equity type placement agreement, a company's always in charge of its equity. And at the end of the day, if it might cost them a little bit to get that deal done, but they always have that option. So that's what we do. Always, that's what we try and provide.
And how important is Africa to you? I mean, it's obviously for London, the London market in general, it's quite an important continent. We have a lot of London African companies listed in London, but is it an important continent for you, Riverfort?
Yeah, well, one of our biggest investments that we've supported from very little cash flow, or actually zero cash flow, all the way to nearly $2 million of free cash flow a month, is Jubilee Platinum. So we've assisted that company from nothing, from a company that originally wanted to just sell technology, to a company that has its own assets, a large producer of chrome, a relatively large producer of PGMs in the country. And to us, it's a very successful model. But I think the key there was the relationship that we managed to build with the company, management's integrity that's behind the company, and the entrepreneurship behind the company, where the company is really about, it's better to do something than do nothing. And I think that's an important factor.
I know that's mining, not oil, but correct me if I'm wrong, I think you've done 3 fundings for them, haven't you? Is that correct?
With Jubilee? Yeah, we've done a number, at least 3 over the years.
I had lunch with them on Friday, and they were very complimentary about you. So,
thank you.
Great.
Yeah, we've had a long-term relationship with them since probably 2016 now, or 2015.
So that's obviously a model you'd like to maybe get going with some of the African oil companies, is
Absolutely.
to say, look, we can fund you maybe, $2 million now with maybe a $2 million additional funding, but then, if you come back in 2 years' time, we can maybe grow it to $5 million.
Yeah, so we just did with Savannah, it was a $10 million headline earning or headline number. So we are definitely, it's always about the relationships. So as you get to know a company, you're always willing to put more into the company, because it's about trust between management, between the investor, and you understand the business model better, and then you're more prone to support more.
The real key takeaway from this is that companies should look at you like any other institutional investor, really. You just have a slightly different product. You're actually more flexible, but actually you want to grow with the company and them to be successful just like anybody else.
Absolutely. I mean, that's really, we like to joke in our team that the day when we know we've been really successful is when a company says to us, actually they don't need us anymore. Yeah, we've got a much bigger, larger people that are knocking on our doors to give them financing. Just that's really what the ultimate thing of success. And we've done that. We like to, and it's not just about giving companies debt. We like to put companies in. We have a really good network of investors, and we like to put companies in front of those investors, and the people that we're talking about. They're close to us, we tell them the story, they understand the story, and generally it's just about the CEO arriving in town or arriving in London and the deal's really done. They already have $5, $10, $15 million in equity allocated to them. It's just coming there and having a cup of tea and because people understand the story really well.
Sounds fantastic. Look, Andrew, it's great to have you here. The sun's going down. There's a great party going on, so let's go back and enjoy the party, and good luck finding some new clients down there.
Absolutely.
Well done. Great job.